It's great to be back on YouTube. I've been out for 6+ weeks. I'm going to fill you in on the uranium market today. A bunch of news, some bullish and bearish. I am still very bullish on uranium, especially long term. I'll let you know what I've been buying, what I've been trading, especially in the uranium market, and where I think the overall market picture is, and where I've been for the last 6 weeks. I'll touch on that a little bit, but hit that like and subscribe button below if you want these videos. A lot of people have been saying they want me to do videos every day. We'll see how that goes. I do enjoy making these, but we're just gonna jump right into it. So last time I made this video, a lot of uranium stocks were up 40+% more than where they are today. We saw some 52-week highs with Cameco, but right now there is a massive discount in the uranium market, especially. A lot of the overall market, have been very volatile. We've seen some of the biggest stocks on the market drop hard, but for uranium, because it is such a small market, obviously off the 52-week highs, Cameco is even down 25%. And then you go down to some of these explorers, and they're 60 to 70% discount. And even Centrus Energy, which makes, the HALEU fuel, eventually for hopefully all the reactors in the US and all over the world as well. Small modular reactors, that's going to be the future. And then now uranium enrichment for the US, they're going to be a part of that. But the stock, you can see, even though they make all that money, is down 72%. This is crazy. Stocks that are making money, hand over fist, which, Centrus has. The war in Russia obviously dropped that stock. And, we saw the market get really excited with uranium back in September. And that was around the time, the end of September is when I went over 55% cash. And I started to day trade a lot of the stocks in the market, the bigger uranium stocks. And, I felt that there would be a market downturn. And I ended up being right with the overall market. It did, pull down uranium. We saw uranium run up with the war. Uranium went to $65 and then now it has retraced. We're getting close to 50 again. We've had some really bullish news though. We've seen Japan, this elephant in the room that I've called it, for these Japanese restarts, these big reactors, coming back online. Japan, their prime minister said that they really needed to rely more on nuclear energy and, they were going to be making the moves. Well, they did restart one, number 2. This is number 2 at Shimane. I think I pronounced that right. Down here, number 2, they restarted. So that is that's nice to see. But we've had some bearish news in uranium. Specifically, they are not restarting the 3 up here in Tamari. These 3 along the coast. They are not restarting those because they are not adequate tsunami proof yet. Though they are looking to build a type of wall because the plants themselves are only 33 feet above sea level. And, a tsunami, it's not good, especially with nuclear. Some other somewhat bearish news for nuclear. EDF rules out keeping their nuclear plant. This was their Hinkley Point there. This plant, unfortunately is going to be shut down. There are new plants obviously being built. The S&P urges UK government somewhat anti-nuclear. They're wanting them to ditch this obsession with nuclear powers and focus on renewables. You hear this all the time. Unfortunately, it came at a bad time right now. We're starting to see a lot of recession fears. These plants do cost a good amount of money, but it is going to let them hit their carbon goals. In India, the plant that they're building, the 700 megawatt plant, it's actually was supposed to be coming up operational a lot sooner, but it's looking like it's going to be pushed back a little bit. And this is unfortunate. It's going to be like March of 2024. It looks like, but they were supposed to be a lot sooner. So, we're starting to see a lot of these little, negative things out there for the market. This is another one. I kind of think this is FUD. Stanford-led researcher finds SMRs, small modular reactors, will basically make more nuclear waste, is what he's saying. But what's funny is they only did one study with one small modular reactor. There's like 70+ reactor designs out there in 30+ major companies. out there. So really looking at this study, I think it's kind of a little odd that this Stanford professor would say that. So I looked into him a little bit. He actually had made some ceramic design that was supposed to be used with, the construction of nuclear power plants. And I'm just wondering, did the SMR companies kind of blow him off? And is this why he's putting, did NuScale, blow him off and not want to use this ceramic type design? So is that why he's, kind of going anti-nuclear, especially a small modular reactor? I don't know, but it is kind of, I don't think this study really means anything. I believe that a lot of the small modular reactors out there, they've said will be a lot safer. So safety is number one. And I don't honestly think that there will be more nuclear waste. And some of these reactors are looking to recycle their waste as actual fuel. So it's going to be a lot better. I think it's going to be a lot safer, and they're going to be a lot cheaper in the long run, especially. And they're going to be able to build these faster. They take up a smaller footprint. I mean, just environmentally, it's a lot better for the environment. Smaller footprint, in an area, and it's going to be good for, small communities, the military, research facilities, even smaller reactors. It's going to be great. So I think it just highlights that, there are going to be challenges in nuclear, even though it's really the only way to go. But prices have been going up. We know we've retraced uranium pretty, in the spot market, pretty big, in the last month. So spot SWU though is up, and we've seen these long-term prices up the most. We're at 130 for SWU. So I really do think that utilities are starting to come back into the markets. We're starting to see a push because of the war. Obviously, enrichment is big. I think we're going to see a renaissance with, nuclear enrichment in the US, because really we rely too much on other countries. So that is positive. And another, kind of signal is Boss Energy. They give the green light to restart their Honeymoon uranium mine there. So it looks like it's going to be 113 million. They've approved, and they're going to redevelop the mine, and they're looking to do this, I believe, the end of the next year is when they said. So, it's the ramp up production. It looks like 2.45 million pounds a year. So within 3 years. So by next year, they're going to be, obviously, hopefully, it says the final quarter of 2023, they're going to be able to get into production. Now, we know, looking at the past, when you get a new mine up, you're going to have issues. You're not even going to hit close to these numbers likely. Paladin, and Langer Heinrich, they didn't even hit like 250,000 pounds, not let alone 2.5 million. So we're probably this, it's going to take a while to get up to this, but this is still small compared to the overall sector and what it's going to need to replace a lot of these mines that have went offline. So this is a good signal, though. I think it's pretty bullish. We did see crude oil this morning go down 2.5%. The reason why Saudi Arabia is basically saying that they might end up raising their oil output levels because of what's kind of going on with Russia. If Russia is not able to sell their oil, Saudi Arabia has already been near their peak. We'll see how that goes. Obviously, supply and demand, more supply. Saudi Arabia ups its supply. Prices could go down. Is this good for the market? Is this good for inflation? It could be. Some are saying that, if those prices in oil go down, it doesn't mean uranium's going to go down. But uranium has been pegged to the overall market for, some time. Some weeks it is. And then sometimes when the energy sector is doing well and oil's up, it has went up. So I just want uranium to be unyoked from everything. I want it to trade based on long-term fundamentals. I want investors to see that. It would be nice. We saw this big jump here to $65, and then we retraced. Like I said, we're near almost 50 again. So this is positive still. And I'm hoping here, this new somewhat base, hopefully in the 50s, that it's a little longer, it's a little more steady. I would like to see this breakout, obviously $75+ very soon, but I think it might be kind of healthy to stick around the 50s, maybe 60s. And then before we take off, I think over 100. We need the price well over 100, just because of inflation, to get back to, where these companies really need it to get into production, at least make a small profit. This last month and a half, it's been crazy. On my channel, I think I made this video, my last video, we were, in the nines in energy fuels. And now we retraced a few weeks ago down to $5. That just shows you how volatile and how much money you can make trading. And I've been trading this stock. I've traded this stock since it was $1. I was long-term in the stock. And then now energy fuels, they've really came a long ways since obviously 2020 when I first started buying this company. But I've been day trading this company and swing trading a lot. I've done really well on it. And thankfully, during this time, when I hurt my back, I sold everything, pretty much everything, and including my uranium stocks, because I wasn't going to be able to look at, the overall market. And, I got strep throat and I was like, you know what? I'm not trading anything. The market, the NASDAQ, I'll show you in a second, the chart, it just looks really bad. We were seeing, big stocks like, Netflix drop, 50+% in just a few days period. So, I was very bearish on the overall market. So I went almost 100% cash. And day and swing trading, you see how volatile energy fuels can be. It can swing $1 or $2 really quickly. So this stock, UEC is another one, pretty much trades identical. Uranium stock, uranium producer in the US. These stocks still on my radar, still been trading. I'm doing really well. The past couple of weeks, I started trading again. I've been doing, smaller trades somewhat. I haven't been doing as well as I was doing, profit-wise when we were in February, March, April. But I'm getting back into trading with, especially uranium, day trading. Energy fuels, I think, obviously is very undervalued. U.S. producers, especially UEC, these companies, I think we saw a big drop just, yesterday, 7% in UEC. And I think that it's a little... we're already back close to the $50 range in uranium. And, we were seeing 52-week highs when we were near, $55. So I think that, the overall market, if this, the pre-market right now with the overall market's looking pretty good. We'll see how that holds up. This was what we had yesterday for the market. And the NASDAQ, it went down almost 1%. By the end of the day, it dropped pretty hard. And I'll show you what this looks like. So why I've been bearish the overall market since pretty much the end of last year, the fall of last year, I was really started to get really bearish. These are when we started to really peak in everything. And I went heavy cash. Now, if you look at the NASDAQ, so this is NDQ. This tracks the NASDAQ index. The overall market, we look at the global financial crisis drop, and then you look at the 2020 drop, and then you see the drop in January. This is not good. This is huge. This is a massive drop. We saw that it looks something like the dot-com bubble to me. You see this huge drop, the dot-com bubble. That's what this looks like. Now we have recovered since, we were really low a few weeks ago. We have recovered some, but it's still not looking good. But I think money is starting to move into energy. More money will move into energy. I think that the NASDAQ, I've said this before, and I pinned this tweet on my Twitter. I said reasons people sold stocks since 2009. It's always recovered. The U.S. market's always recovered. But I said, what about Japan? December 1989 and 1990. The truth is markets don't always go up. And I think that our debt to GDP was looking very similar to Japan's. And I put this back in February. We went into the war, and I really felt that even with those things, I felt that the market was not looking at the bigger picture, that we could be heading into a similar Japanese type market where we peak, last year, and we never see that for decades. But we've looked at why people sold, since the financial crisis, and it's always went up, right? And, this was 2019, this chart, US stocks to go nowhere for 20 months. That was a real bad period. A lot of these investors now, they're not looking at, these times were really boring for the stock market. It's funny, people get mad because, stocks don't go up, 10% in a day. Now I've been seeing investors, and it's really crazy because there were some times when stocks would barely move 1% in a month. It was just really boring. But, the volatility, there is more money in this type of trading environment. But really, we could be looking at this, Japanese market. And that's what I said back then. Where it peaked, 89 into 1990 and boom, dropped. And they've still never recovered. So is the US there? I said this, this tweet probably wouldn't get any likes. It did. 100 people saw it. And, it was right. Because look where, since February, look how bad the market's dropped. And I really actually was saying the same thing even back here in, November, December, the peak. And I said, you know what, like I'm going to be heavy cash and I love uranium, but uranium is a very small market. Uranium stocks, they can get pulled down with the overall market as we've seen 50% drops, in some of these just in the past month or so. Even the bigger uranium stocks are still down close to 50%. Energy Fuels down 46% from its 52-week high. So I see upside there. I'm still, very bullish. Like I said, today, the pre-market, we are green. So we'll see if it's because of oil being down, if the market's thinking that, maybe inflation is not going to be as bad. Rates, the Fed is going to, hold off a little bit. So I am bullish in that. I'm going to continue to day trade and swing trade uranium stocks. I am looking to establish long-term positions. I think U.S. producers pretty safe for the most part, especially a company like Energy Fuels that is diversified in REE, and they have mines outside of the U.S. as well. We're Brazil now, and the government is really looking into REEs, not just uranium, especially the U.S., to not be relying on China and other countries. So I think that's very positive. And with the market cap under $1 billion, I think it is very cheap, very, very cheap. I mean, we saw it a month ago, in the double digits. So, uranium stocks in the U.S., these producers, very safe in my opinion. I will be establishing, like I said, long-term positions. And it's just so hard not to want to buy up all these micro-cap uranium stocks as well. Just how small the market caps are. But if you look at it since SPUT, which, last year, we're still seeing it's 80% of these stocks, these uranium stocks are still up at least 50%, some of them 100% since summer of last year. So it's still good. Year to date, most uranium stocks are not doing too well. Some of the bigger producers in SPUT are up. Some explorers that have found uranium, some of the ones that are restarting, they are up. For the most part, there's big upside. And this percentage gain on the uranium chart here, these are since when I first bought uranium stocks, I pretty much bought every single one of these. And this is the price around March of 2020 that I bought it at. And I keep this as a reminder of, it is a long-term play. The Paladin shares that I bought then are up 1,600%, but they were up a lot more because they're down 36% from the high, so they were up, 3,000 plus percent, when that goes up. So it shows you the long-term compounding effect of uranium. I do think that there's still big upside for a lot of these. They've retraced a lot of these, especially when they're down 50 plus 60%. You can see the, say Bannerman, this was 3,000% up more. The next leg up though, I think we'll jump past 75, and I don't think we'll have as big of a drop. The overall market hopefully has corrected some to heal itself, but there is a possibility we could get back to this 9,000 range, I think. Uranium, because the war is still going on, we could still see some updates with the US government on a Russian uranium ban. I think that will get us over 75 plus. We're going to see if uranium can break $75, hopefully this summer. I believe that it would have been over $75 by the mid part of June right now. I think we would have hit that if the market would have held up overall. These funds, these traders, they really pushed down uranium, the spot price of uranium, and then because the market pulled down everything, Sprott Physical Uranium Trust, they were not able to get their New York Stock Exchange listing. So they really haven't been raising any money, not too much money. They have like 50 something million, but they haven't been buying any uranium in the spot market. So we saw that pull off. We've seen obviously a lot of the negative news I showed you. The wars really caused a lot of issues in the overall market. It's helped uranium in the very beginning, up and down. You know, we had those black swans where, you know, there was an issue with the plants there. It's like, is it going to be a black swan? And then it turned into a golden swan because of the uranium ban possibilities. And then it's still on the table. Obviously, the government's taking a lot more time on that. So these things are still on the table. I'm still very bullish long-term on uranium. I'm bearish still in the overall market, but I am trading uranium. That's why I'm not established, you know, even at these prices, big long-term positions in a lot of uranium stocks. Again, I would rather have cash to be able to day and swing trade a lot of these uranium stocks. And the market does continue to go down and pulls down a lot of uranium smaller market cap stocks. I probably will start to establish some long-term positions in some of the smaller ones. I'm already looking at doing that for the US producers. And remember, I have always been in my Discord. I've been off of YouTube for 6 weeks, but I am in Discord every single day. And I've been trading the market the last couple of weeks, doing pretty well. So I post my trades in there. I post when I buy and sell. So if you guys want access to that, there's a link in the description below. And like I said, I wasn't gone from the market. I've been still here every day in the Discord. Even when my back was hurt, I was still on my phone. So I haven't abandoned you guys. I will be making more videos, a lot more videos now. I do miss it. I miss making videos for you guys.